Financial literacy is a crucial skill for entrepreneurs aiming to achieve sustainable business growth. The ability to understand and manage finances can make the difference between success and failure in the competitive world of business. This video delves into the essentials of financial literacy for entrepreneurs, providing insights into effective money management strategies that can drive business growth. Understanding financial statements. Understanding financial statements is fundamental for entrepreneurs aiming to achieve financial literacy and manage their business growth effectively. Financial statements, including the balance sheet, income statement, and cash flow statement, provide a comprehensive overview of a business's financial health. The balance sheet offers a snapshot of the company's assets, liabilities, and equity at a specific point in time, helping entrepreneurs assess their business's net worth and make informed investment and borrowing decisions. The income statement, or profit and loss statement, details the business's revenues and expenses over a period, highlighting profitability and cost management. Lastly, the cash flow statement tracks the movement of cash in and out of the business, revealing liquidity and operational efficiency. Mastery of these documents enables entrepreneurs to make strategic decisions, optimize financial performance, and ensure long-term growth. Budgeting and forecasting. Budgeting and forecasting are critical components of financial management that empower entrepreneurs to plan for sustainable business growth. A budget serves as a financial blueprint, outlining expected revenues and expenses over a specific period, guiding day-to-day financial decisions, and ensuring resources are allocated effectively. Accurate budgeting helps identify potential shortfalls and opportunities for cost savings, enabling proactive management. Forecasting complements budgeting by predicting future financial performance based on historical data and market trends. This forward-looking approach allows entrepreneurs to anticipate changes in the business environment, adjust strategies accordingly, and set realistic financial goals. Together, budgeting and forecasting provide a robust framework for financial planning, helping entrepreneurs stay on track and make informed decisions to drive growth and profitability. Cash flow management. Cash flow management is essential for maintaining the financial stability and growth of a business. Effective cash flow management ensures that a business has sufficient liquidity to meet its obligations, invest in growth opportunities, and navigate through financial challenges. Entrepreneurs must regularly monitor their cash flow to identify patterns, anticipate shortages, and implement strategies to optimize cash inflows and outflows. Improving receivables through prompt invoicing and efficient collections, managing payables by negotiating favorable terms with suppliers, and maintaining a cash reserve for emergencies are crucial practices. By focusing on cash flow management, entrepreneurs can ensure their business remains solvent, agile, and well-positioned for sustained growth and success. Financing options. Exploring various financing options is crucial for entrepreneurs seeking to fuel their business growth. Understanding the differences between equity financing and debt financing allows entrepreneurs to make informed decisions that align with their financial goals and business needs. Equity financing involves raising capital by selling shares of the business to investors, providing funds without the obligation of repayment, but resulting in diluted ownership. Debt financing, on the other hand, involves borrowing funds from lenders with the commitment to repay with interest, allowing entrepreneurs to retain full ownership while managing the burden of regular repayments. Additionally, alternative financing methods, such as crowdfunding, angel investors, and venture capital, offer unique opportunities for securing funds and strategic support. By carefully evaluating the advantages and implications of each option, entrepreneurs can choose the most suitable financing strategy to support their business growth and sustainability. Managing expenses. Effective expense management is pivotal for maintaining profitability and ensuring the availability of funds for business growth initiatives. Entrepreneurs must adopt a disciplined approach to tracking and controlling costs, continuously seeking ways to improve operational efficiency. Implementing cost control measures, such as renegotiating supplier contracts, optimizing inventory management, and reducing waste, can significantly enhance the bottom line. Investing in technology that automates processes and improves productivity can also lead to long-term savings despite initial costs. Additionally, outsourcing non-core activities can be a strategic move to reduce overhead and focus resources on core competencies. By meticulously managing expenses, entrepreneurs can create a leaner, more efficient operation that supports sustainable growth and financial health. Tax planning and compliance. Tax planning and compliance are integral aspects of financial management that can significantly impact a business's profitability and sustainability. Entrepreneurs must be well-versed in their tax obligations and proactively seek strategies to minimize their tax liabilities. This involves taking advantage of available tax deductions and credits, which can reduce the overall tax burden. Proper documentation and meticulous record-keeping are essential for claiming these benefits and ensuring accuracy in tax filings. Effective tax planning also includes timing income and expenses to optimize tax outcomes, such as deferring income or accelerating expenses to benefit from lower tax rates. Additionally, staying compliant with tax regulations is crucial to avoid penalties and legal issues. Regular audits, consultations with tax professionals, and staying informed about changes in tax laws help entrepreneurs maintain compliance and leverage tax planning to support their business growth. Financial analysis and decision-making. Financial analysis is a critical tool for entrepreneurs, enabling them to make informed decisions that drive business growth and sustainability. By interpreting key financial ratios, such as liquidity ratios, profitability ratios, and solvency ratios, entrepreneurs can gain valuable insights into their business's performance and financial health. Understanding these metrics helps identify strengths and weaknesses, guiding strategic planning and resource allocation. Break-even analysis, for example, reveals the sales volume needed to cover costs, aiding in pricing and sales strategies. Scenario analysis further enhances decision-making by evaluating the potential impacts of various business conditions, preparing entrepreneurs for best-case, worst-case, and most likely scenarios. Through diligent financial analysis, entrepreneurs can make data-driven decisions, mitigate risks, and capitalize on opportunities, ensuring their business remains competitive and resilient. Practical financial management tips. Practical financial management is the cornerstone of business success, providing entrepreneurs with the tools to maintain control over their finances and drive growth. One of the most important steps is to create a comprehensive financial plan that outlines your business goals, strategies for achieving them, and a timeline for implementation. Regular financial reviews are essential to assess performance against these goals, identify areas for improvement, and adjust strategies as needed. Building strong relationships with suppliers and vendors can lead to favorable payment terms and discounts, which improve cash flow and reduce costs. Tracking all business expenses meticulously helps in managing cash flow effectively and ensures accurate tax preparation. Understanding tax obligations, including income, sales, payroll, and industry-specific taxes, is crucial, and working with a tax professional can ensure compliance and identify potential savings. By adopting financial technology, such as fintech solutions and mobile banking, entrepreneurs can automate processes, streamline operations, and gain real-time insights into their financial health, enabling informed decision-making and fostering sustainable growth. Financial literacy and technology. The integration of technology into financial management has revolutionized how entrepreneurs manage their business finances, making it more efficient and accessible. Financial technology solutions offer a range of tools that automate and streamline processes, such as invoicing, payroll, expense tracking, and financial reporting, reducing the likelihood of errors and saving valuable time. Mobile banking apps provide entrepreneurs with the convenience of managing their business accounts on the go, allowing them to monitor transactions, transfer funds, and maintain cash flow with ease. Digital payment solutions, including credit card processing, PayPal, and mobile payment services, enhance customer convenience and ensure quicker receipt of payments, improving overall cash flow. Additionally, financial dashboards offer real-time insights into key financial metrics, enabling entrepreneurs to make informed, data-driven decisions swiftly. Embracing these technological advancements not only enhances financial literacy, but also positions entrepreneurs to manage their finances more effectively, ultimately driving business growth and sustainability. That's all for today's video. If you enjoyed this video and want to see more content like this, please hit the like button and subscribe to our channel. Don't forget to click the notification bell so you never miss an update.